Hey everyone, what's going on? In this video, I'm going to teach you my gold trading strategy. Now, this has been requested by a lot of people, and I thought, why not just make a video on this? So this model has a very high win rate and it works only on gold and sometimes on AUD JPY and CAD JPY, but I highly suggest, and I'm actually telling you to just stick to gold because it has a very good win rate. You can basically make this your bread and butter model. Like, you can use this for the rest of your life and you can make a stable income. You can pay your bills. You can basically travel the world if you want to, but it will require some practice, and trust me, it is the most mechanical strategy. It requires no daily bias and you only take one trade per day. All right. And at a very specific time. So at a very specific time, you're looking to take one trade only per day. And that is it. Okay. So you don't have to be on the charts 24/7. You just want to wake up at a specific time and then you have to trade this setup. So the very first thing that I want you to do is go over here and change your time zone to New York. Now, once you do that, you do not have to worry about your time zones, right? So whatever timing I'm telling you for this strategy is going to be based on the New York. Now, essentially what you want to do is before 20, so this is around 8 p.m. okay, not a.m., 8 p.m. So before 8 p.m., right, this is the 8 p.m. time, the 8 p.m. open. We want to mark out the most recent high and most recent low on the 15-minute time frame. So it's going to be this and this. So before 8 p.m. or 20 New York time, just mark out the most recent high and the most recent low. Now, after 8 p.m. open, you are waiting for price to either take out the 15-minute high or the 15-minute low that you just marked out here. So basically what you would do after 8 p.m. open, and that's actually when the Asian session starts, and that's when the volatility comes into the markets. So you're gonna see price take out either the high or the low. So let's suppose if the high is taken out first, right, the 15-minute high is taken out, what I want you to do is drop down to 1 minute time frame. Okay, you will be dropping down to 1 minute time frame and you will be looking for a market structure shift. So essentially after that, what you would be doing is you have to take your entry before 10 p.m. okay, so that would be 22 New York time. So your entry must be before that time period, okay? And you primarily want to get a market structure shift with displacement. So what I mean by displacement, when a market structure shift happens, that leg must have a fair value gap, okay? It is very crucial. So once you get a 1 minute market structure shift after the 15-minute high was taken out, you are simply looking to take your entry either directly on the close. So let's suppose that you get a market structure shift and the candle closes below it. You enter right away, but it's going to give you a less risk reward ratio. Now what I do is I sometimes take my entry from the order block, so consecutive bullish candles, and make sure the leg has a fair value gap, but I'm not going to take my entry from fair value gap. I'm just going to take my entry from an auto block. You can take your entry from fair value gap as well, but I suggest you take from auto blocks because sometimes price will not come into your fair value gap. So consecutive bullish candle or a single candle, right? If it's there, you take your entry. Now you go for 1 to 2 risk to reward. You go break even after 1 to 1 risk to reward ratio is hit. So price is going to tap, right? And you are simply going break even once 1 to 1 is hit. So at this point, you are basically risk free. And then you can basically take like 80% of the profit at 1 to 2 risk to reward. And then you can hold and trail your stop loss above every high that is formed afterwards. okay, to maximize on the profits, because there are some times when this model happens, price will just keep distributing down, down, down for the rest of the day, okay? So that 20% that you leave for the trade can basically make you a shit ton amount of money, all right? And similarly, you would do the same. So before 8 p.m. New York time, or we could say 20, it's the same thing, right? You mark out the most recent high, low, look for the same pattern. So let's suppose if the low was taken out first, you drop down to 1 minute time frame, you look for market structure shift with displacement, and you take your entry before 10 p.m. Okay, remember, I'm not talking about AM sessions, I'm talking about PM, Asian session. That's what I'm talking about. Your stop loss is going to be always going to be below this low, but you know, to account for the spreads, your stop loss could sometimes be somewhere around here. And if you are trading on the prop firm accounts, you will not be able to open the trades if they have, you know, like restrictions, lot size restrictions. So your stop loss can even go below here as well, just to get into the trade. All right. So if you are like trading on a real account, you don't have to worry about it. But your stop loss can go over here as well. It doesn't matter. You just have to get into the trade, and price will mostly give you 1 to 2 risk reward, and sometimes even more. So that is the entire model. Now I'm going to give you guys some examples, detailed examples. Make sure you do not skip them, because you won't miss crucial information that I'm going to provide in the examples. So let's move on to the examples now. All right, guys. So here is example number 1. And as you can see, at 7:45, right, I'm marking out the most recent high, or basically 7:59. I'm marking out the most recent high and the most recent low on the 15-minute time frame. So now I'm waiting for price to take out the high or the low, and as you can see, the high was taken out. So now I'm simply going to drop down to 1 minute time frame. I'm going to look for a market structure shift. So far we don't have it, so we can maybe expect another higher high, higher low, higher high formation, and that's exactly what we get. So if I keep playing this, you can see that just around here we got our shift in the market structure, right? So now what do we have? We have this auto block here, right? I would have considered this move, but since it is a single candle, that is a single candle auto block. Just before that, it had a bearish candle. So that makes it a single candle auto block. So now I'm going to take my entry from here. I'm going to put my stop somewhere around here to, you know, deal with the spreads. Somewhere around here could be fine as well. And basically I can go for 1 to 2 and close like 80% of my position. So let's see. So we get a tap, and you can see that how well the take profit was hit. So now if I held it somewhere around here, let's see how it played out. So you can see that price kept going down and down and down, and that would have given you an insane amount of risk to reward ratio. But it's not going to happen every single time. And to, you know, improve your psychology, just go for 1 to 2 and close 80% or 85%, and then hold the rest for bonus money, if that makes sense. All right. And make sure you always go break even after 1 to 1 risk to reward is hit. So now that we have seen the example number 1, let's move on to example number 2. Okay, guys. So here is example number 2, and you can see at 7:49 p.m. I'm going to mark out the most recent high, and that is right here. And the most recent low is somewhere around here. Okay. So let's see which level is taken out first. And this right here is the 8 p.m. open. So now let's see. So over here you can see that the most recent high was taken out first. So if I go to the 1 minute time frame, and if I look somewhere around here, what you can see is we got our market structure shift. Now, as I said before, you can basically just enter somewhere around here and put your stop above here. So you get an entry on prop firm accounts and whatnot. And you can easily then go for 1 to 2 risk to reward. And you're going to see that we came back. Of course, we came back into this breaker blocks, and we filled in this fair value gap. But Actually, you can just enter like this as well. Just make sure that the candle is not as huge as this one, because then that's a little bit disadvantage for you. But you can see that we didn't have much drawdown here, so it doesn't really matter. So you can see that you could have held, and this would have given you a very nice trade actually. You can see the potential of this strategy, guys. Let me give you guys one more example, and then I'm going to end the video. Okay, so this is going to be a different example and a special example, because I know a lot of people have left the video already, but I left this secret sauce for the people who are an actual, fan of the channel and actually trust me. So you can see at a 749, right? Sorry, 759, right? We mark at the most recent high. So this is going to be the most recent high, and we have the most recent low. So now let's see what happens. Now notice what happened here. While we're going down to take out this low, we created another low. Okay, so if that happens and you see that the low is taken like that, so initially we had this high and this low before 8 p.m. open, but after 8 p.m. open, while we were going down, we also created another low. So now this low becomes invalid, and this low becomes a key level or point of interest. So now after this low is taken out, I'm going to do the same, and I'm going to drop down to 1 minute time frame. And then afterwards, what I'm going to do is I'm going to look for my market structure shift, right? And it happens right here. And then we have the consecutive bearish candles. So that is going to be my entry. I'm going to go long just around here, stop somewhere around here. And as usual, I'm going to go for 1 to 2 risk to reward. So let's see how this plays out. So you can see that the take profit level was hit and the price kept going up, and eventually it took out this high over here. So basically a market maker model, but you don't have to worry about all that stuff. And you can see we filled this tiny fair value gap, and then we pushed up. So thank you so much for watching, guys. I really do hope you guys learned something from this video, and please, if you want to thank me, just hit the subscribe button and hit the like button, and I'll see you guys in the next one. Goodbye.